Hello, everyone. Welcome to today's live session. I just want to make sure everything's working okay. I'm doing this from a different office today with a different computer, but hopefully it should be okay. You can hear and see everything that's going on. So we'll get cracking. Let me just put the risk warning up, and then we'll get started. Let's just bring that up now while I'm talking away. So yesterday did end up being quite a volatile day. We were saying towards the end of yesterday's session that the data that we had coming out was US retail sales, and retail sales were much worse than expected, relatively speaking, and it sort of did start to fuel fears of the potential for a recession in the US. So we saw stock markets, the out of hours markets, really fall ahead of the open. We did see a bounce back as the day went on, but we had a lot more volatility in stock markets than we had been experiencing. So I think it'd be interesting to take a look at those today. Just to remind you, this is the last one of these of the week. We do these every day of the week. We try and do them every day of the week at 12:30, and it's a quick look through all the major markets. But if you have any questions while I'm going through this, just type them into the YouTube chat box, and I'll try and answer them as best I can. But I think we are that risk warning's been up for long enough. So let me just put up the trading platform. Let's just get that up, and we'll get going. Oh, hang on. There we go. I'm doing this on a Mac, and I'm not quite used to using a Mac. There we go. Right. Let's start off with stock markets. Let's take a look at stock markets from yesterday, just to see those moves off the back of those US retail sales. Let's start off with the S&P. We'll look at the Dow as well. Let's just if we bring this chart up, and if we flip it over to be a 5-minute chart. So the data came out yesterday at 1:30 UK time. So let's just go back a bit in time to where we are. There we go. So it was here yesterday. So this is where it came out. You can see. So it was about half an hour after we'd finished yesterday's session, and the S&P was trading around about 2760. The data comes out. These are 5-minute candles that we're looking at. So and you can see the market reaction. You know, by 2:30, 2:45, by the open, the market had dropped 30 points, you know, which is a big, we'll have a look in the Dow in a minute, but that's a big sell-off into the market. But what's interesting, and what is always interesting, I think, in these sort of moves, is maybe taking the view, has the market overreacted? You know, and we did see that it did stabilize in that first 15 minutes or so, and went on to recover as the rest of the session went on. So the market did rally, and we ended up finishing up, sold off a bit towards the close again down here. But what's interesting again is that overnight the market has lost momentum, but has once again pretty much, give or take a few points, has turned around ahead of yesterday's low. So going into today's session, I mean, it's bounced back 18 points from those lows. Going into today's session, I think that's going to be really the key level to watch. So the lows from yesterday, so on the S&P 2730, we'll look at the Dow in a minute. So has it really changed anything? You know, it's because we've had a bit of a sell-off yesterday on the open. Has it really changed that recovery? And I think the answer is not yet. You know, if we flip this over to a daily chart, you know, on the 5-minute chart, the sell-off into the open looks really dramatic, but you can see that was yesterday, that little red candle up here. So even though it was a big sell-off, in the great scheme of things, our major trend is still chugging along. And I think for the S&P, some of the obvious levels to watch, the lows from the end of January, around about, 2675. But let's flip this over to the Dow, because it was the Dow we were looking at going into yesterday. And we'll go through the same sort of thing for the Dow, so you can see just how the market reacted once those retail numbers had come out. And this is all about the fear of fears building for a recession in the US. So there's our Dow move. So the Dow before the number came out, was trading around about 25,600. But an hour later, just over an hour later, as the market was opening, the Dow had dropped back 300 points. But again, you can see in the overnight market, I mean, the overnight market clearly sees less volume than we get throughout and during the normal trading day. But again, you can see the market has turned around. Okay, it slipped through about 20 points lower than yesterday's lows, but it's managed to bounce back a couple of hundred points from the lows set about 8 o'clock this morning. So I think if we're looking at levels to trade off, a really important area to watch is the previous day's high and low. So let's see how today stacks up. If we did see, we're strong at the moment. We've still got a couple of hours almost until US markets open officially. If we see them come under pressure this afternoon, just watch how these markets perform if we do slip towards yesterday's lows. And if we flip this over to our daily chart, again, you can see the sell-off yesterday, it doesn't even really register. The trend for the Dow is still up. The immediate short-term support to watch on the Dow is around about 24,850. So these markets, after a wobble yesterday, still looking strong, I think, overall. And that recovery from those Christmas Eve lows is still very much going. So for my money, still looking to buy dips, still looking for the market to push higher. For the Dow, the big hurdles are coming in just above 26,000. But going into today, keep an eye on yesterday's lows to see what happens if we do see the market under pressure. The DAX, the German DAX, has been, as usual, doing its own thing all over the place a little bit. The DAX. Let's just flip this over to an hourly chart. So we did see something of a push lower this morning. There we go. There was that gap. I think it's been, for me anyway, a really hard market to trade over the last few days or so, because there are levels that hold, like these old levels yesterday were holding, sort of ahead of sort of 11,100, 11,080. Gaps lower this morning, the DAX down to 11,020, and we are 200 points higher. The market's moved a couple of hundred points higher since then. So really volatile, quite choppy, breaks a level and then suddenly turns it round. But again, getting dragged higher by these US markets. So I think we are positive going into this afternoon, but arguably a little bit nervy given the volatility we saw yesterday. But I think it could make for an interesting trading session. And finally, on stock market indices, before we get into other markets, the Footsie. So we were looking at this yesterday because it was the first time the Footsie had been above 7,200 since, that's an hourly chart, let's flip it over to a daily. So it's the first time the Footsie had traded through 7,200 since October last year. And it had been, if you remember, we were looking, there's been a barrier in November, bit of a barrier earlier this month, and broke 7,200. So it continues to look as if we are breaking out of this downtrend that had been in place for the Footsie since August of last year. So I think it's pretty interesting at the moment. Clearly being helped, I think, a little bit by some of the pound weakness that we're seeing. But there's our hourly chart for the Footsie. So it did sell off a bit yesterday as US markets sold off, but held above this old support around about 71.50. So the market did drift back to about 71.80 yesterday, but has had another push higher today. So for now, that Footsie recovery still going strong, and I think we're seeing it continue to hold above 7,200. So it does look like a valid breakout. But I think we could be in for maybe an interesting afternoon, considering what we saw yesterday for stock markets, but still broadly positive. Let's take a look at the currencies. We had again another vote that Theresa May lost yesterday, last night in the Commons. Let's bring that up. But the pound, I think this is another hard market at the moment, because so much of it is being driven by what's going on with Brexit, or maybe what isn't going on with Brexit. So we're still in this downtrend for pound US dollar that we've been in since the end of Jan. So the market's come from above 132 yesterday, briefly below 128, and it didn't really react that much, I don't think, to the government losing the vote. Arguably, any strength in the pound still looks like a selling opportunity. I think if we're going to break out of this trend, let's see if we can pick it up. I've got a bit of a dodgy mouse today, so let me see if I can pick this up on the chart. Our trend from those highs, looking something like that. Arguably we need to see pound US dollar get above 129. Let's just zoom that in to start shaking that downtrend off. So maybe the risk is at the moment any strength is still going to be met with selling, but I think it's quite a confused picture for pound US dollar at the moment, but arguably still under pressure. Let's take a look at the euro, because we had that bigger level on the euro we were keeping an eye on. Here we go, euro US dollar. Let's bring that up, and we'll flip this over to a daily chart. And it's still just hovering around. I think the euro is maybe a bit more interesting than the pound at the moment. So euro US dollar, we have these lows left from last year, from November last year, around about 112.20. And when we were looking at this earlier in the week, I was saying whenever we've seen it dip below 113, we've seen quite a sharp turnaround. It's looking oversold on the RSI down here. The MACD still negative, still falling. But if it's going to bounce from anywhere, this is the place. But we are not yet, anyway, seeing a turnaround with the same sort of ferocity that we've seen over recent months when we've been down here. So it's felt as if almost recently we've seen, or over the last few months, we've seen people almost falling over themselves to buy the euro down here. We've seen very sharp turnarounds, but it's not the case today. So I think, again, it's going to be an interesting market going into next week, because if it does break below 112, it would put the euro against the dollar at its lowest since, let's just zoom out and see how low that would be. At its lowest since, June 2017. It would be a pretty major break. So let's see, arguably it's still a buy. While it's above here, we've got logical place to put our stop loss, but we're just not seeing any upwards momentum. But I think if we saw it break 112, you'd expect to see some selling. But for now, it is holding up as support. So it's been a bit of a scrappy week, I think, for these two currencies, for the pound and the euro. So hopefully next week will be a little bit clearer. So let's take a look to wrap things up for today, and then I'll get into the questions. We'll look at the two commodity markets. So we'll take a look at oil and gold. So let me just bring those up. Let's take a look at maybe gold first of all. My mouse has decided to die. It's never a good thing, is it? Hang on a second. Let's bring that up. So US crude oil spot. So we'll bring that market up. Here we go. This has pushed higher over the last few days. Just to remind ourselves, we're up about 30% since those December lows. So the December lows were about 42. The market did touch 56 last week, $56 a barrel. So that's a sizable move for the price of oil. It's been a little bit flat over the last couple of weeks, but what has been interesting, I think, if we flip this over to our hourly chart, let's just bring that one up and zoom this one back out. We have seen these old supports, do a good job this week of propping up the price of oil. Sharp sell-off yesterday, again, I think, on this threat of a recession in the US, because clearly, if we do see the global economy falter, it's going to have an impact on oil prices. There'll be less stuff getting made, less stuff getting bought, less stuff getting shipped around the world, less demand for oil. So we saw, oil fall yesterday on these weaker retail sales, but holding above the lows for the week so far. So the lows from, when was that, Tuesday, around about 53, pushed through the lows from later on Tuesday, 53.66. But again, the price has snapped back. So, and I think the argument is still there for a run back up in oil to these old highs, just shy of $56 a barrel. So I think there was, a half decent trading opportunity in oil yesterday onto that sell-off, into that, what has been an area of support so far this week. So pretty short-term support, but the lows from earlier in the week ahead of 53 continue to hold. And finally, gold. I haven't looked at gold, but I'm guessing it would have got a bit of a lift yesterday as everyone starts panicking that maybe things are much worse. Yeah, there's the move in gold. So we've been looking at this all this week, saying how on the hourly chart it's maybe gone a little bit dull in February, but so far during February, 1302, that sort of area has propped up the price of gold. Slid down to it February the 7th, bounced back, came back and had a look February the 11th, and yesterday, just was it between 11 and 12 yesterday, back to it again. We had that negative news out about retail sales, and the price of gold has popped higher. Arguably, so it's popped up, but it's popped back up to where we saw selling all this week. So sort of 1318 to 1320. So if you thought the range for gold was going to stay intact, you know, we've gone overbought on the RSI down here. It's only a short-term RSI. It's the hourly RSI, so it's pretty short-term. But you know, we have seen gold for the past 10 days or so struggle up at these levels. So if you really wanted to take a position on gold, you know, arguably short with a stop somewhere above 1320 is an interesting one up here. Of course, it doesn't change the bigger picture. I still think, personally, I think for the rest of this year, gold could well be a market that continues to build on this recovery that's been in place since August, particularly when we have these worries about economies slowing down. You know, if we do see, you know, more recession start in more countries, you'd expect gold to benefit for that as people look for a safe haven. But in the short term, we've seen this sort of 1318 to 1320 area been a real problem for much of February. So maybe we'll just see it drift off a little bit from there. So that's it. I think the interesting market to watch this afternoon, stock markets. For me, that's the one to watch, because we saw that really bearish open yesterday. So the Dow starting almost 300 points lower yesterday, but holding, bouncing back, and then during the overnight session for the Dow and the S&P, just coming back to those lows from yesterday and holding. So for me, this is the market to watch this afternoon as the week finishes up. I think is it a bank holiday on Monday, I think, in the US. So maybe we'll see volumes dry up a bit as the day go on. I'm sure I saw somebody say it's a bank holiday. But for me, for the Dow and these other US indices, just watch the lows from yesterday. If we see these markets come under pressure today, let's see how they perform when they get back. And for the Dow, it's 25,300. So I'll jump into the questions. Now, we've only got one question today. If there's any more questions, feel free to plonk them in there. But Starbucks, so someone's asked for, let's have a quick look at Starbucks. So let's bring that one up. So let's flip that over to a daily chart and take a look. Take a look at Starbucks. Okay, let's take this right out so we can get a view, the bigger picture. That has been a cracking trend since the summer, hasn't it? I mean, it's the Starbucks share price spent an awful lot of time doing nothing at all. How far back can we go on this? Let's have a look. So if we go back to February 2016, so we go back almost 3 years, the Starbucks share price was around about $55. And then June 2018, so not quite 2.5 years later, but not far off it, it was still $55. And it's interesting that clearly they must have come out with earnings that disappointed the market back in June of last year. The share price dropped about 15% or so. And then since then, we've just seen this solid recovery. And that to me, that looks like a great trend. I think the ideal buying place would have been we need to do our time travel trading to do it. But we had this great trend chugging away, sells off hard into December as the broader markets weaken back to 60. But since then has bounced back, 15% or so, broken out through these old highs. So that's a really strong trend, I think, isn't it? That's a great trend. And the question always is, I think, with something like this, the trend is up. So from a probability point of view, you know, I'd suggest that maybe we could see more gains. I think the question always is, well, where do you put your stop loss? If you're buying into this trend, where do you put your stop loss? And in a way, it's similar to the Footsie, where we've had a bit of a breakout. So the highs from November were around about $69. So we've broken 69. Yesterday hit its best levels for some time. So for me, what's the tightest we want our stop loss? Let's flip it over to maybe a 4-hour chart so we can see a bit more of the short-term stuff that's been going on. So how tight would we want our stop? So the break through 69. So for me, probably the tightest I would want my stop would be these lows here, February the 4th lows, just before it broke out through those old highs. So somewhere the other side of $67 for me, and so if we're buying at 70 or 71, it's a 400-point stop, a 400-cent stop, but it's only a 5% stop, and it's moved 15% in just the last 6-7 weeks or so. So for me, that would be the tightest I'd want my stop loss. But it's definitely an interesting chart because it has broken out. Clearly got some momentum behind the price after some pretty dull trading overall. So Starbucks was an interesting one. So tip on what to trade? Well, clearly it's up to you. But for me, in terms of volatility, someone else is asking. Like I say, I think US stock markets this afternoon, because we've seen plenty of volatility yesterday. A really negative opening, bounced back, bit weaker overnight, but has held above those overnight lows again. So I think stock markets for me, they're ones to watch. We're going to wrap things up there for today and for this week. We'll do it all again on Monday. But as usual, to open an account, to find out more about that company, go to the website, Capital.com. If you have any questions, feel free to drop me an email or leave it on the recording of this this broadcast. Leave the questions below or drop me an email, david.jones@capital.com. And to never miss out on these sessions we do, I think we put up about an hour ago the next stage of our Learn to Trade course. So we're doing a Learn to Trade FX course. So I think part 2 has gone up today, so you can view that on the channel. But to never miss out and get notified when all this stuff happens, just click on the subscribe button down there and the alarm bell. But we'll wrap things up there. Have a good weekend, everybody. And hopefully see you on Monday, and we'll see what next week looks like.